Hello, this is Demon Low with Compass of X. Hope you're doing well today and against good trades. Today we saw the pound yen make a very strong move up, breaking intraday levels, weekly levels, and breaking a significant levels that the institutions are monitoring for a potential pullback to it. So today I want to walk through the pound yen and where it might potentially go to from this point. Typically, the pound yen has been one of those currency pairs that some refer to as the beast because it made significant moves over the last few years. But since the Bank of Japan had been fairly quiet related to the yen over the last few weeks, we haven't seen a lot of movement in the pound yen. But all of a sudden, it came on with a vengeance today, moving nearly 200 pips when our average daily range over the last 5 days has only been about 125 pips. Why the 200 pip move today, and where is that significant level that institutions are monitoring? If you take a look at the pound dollar, you can see that the pound dollar made quite a bit of move as well. This having about a range of about 110 pips or so. Well, it moved about 160 pips today from right around the 156.50 area all the way back up above 158. Now the reason part of this is taking place is because of some of the movement that the Bank of England is doing behind the scenes related to the euro and also related to what the Bank of Japan has done. If you take a look at the dollar yen, the dollar yen has been appreciating since the Bank of Japan increased its quantitative easing from 10 trillion yen to 65 trillion yen. With this quantitative easing, basically selling the yen into the marketplace, this has the apparent effect of strengthening the dollar, and we're seeing this dollar yen move up almost all the way up to 79 today. However, it's not dollar strength, and that's reflected in the pound dollar. See, part of what's going on here is what I refer to as a pre-repatriation play in the marketplace. Repatriation is where Japanese citizens who have foreign investments related to the yen have to close out those positions, bring the yen back home to pay taxes on it. This typically strengthens the yen. So we're having a very strong, weak yen scenario thanks to the Bank of Japan's quantitative easing. And this has caused a preemptive move seen in the dollar yen and the pound dollar related to what the Bank of England's doing. And we've seen it reflected by the pound yen. Now the pound yen, getting back to that today, it made a significant move, and I mentioned it broke certain levels. It broke even the R3 level for the day, and typically when a currency pair gets above the R3, the resistance level 3 for the day, and it closes the day out above that, typically we see a higher move in that currency pair the following day. It also broke the weekly R1 and coming right up to the weekly R2. But that significant level that the institutions are monitoring is this right here, the 200-day moving average. Now the 200-day moving average from an institutional point of view is simply this. When price gets above the 200-day moving average, the market participants, I'm talking about the large institutions, are looking for appreciation in price for that currency pair. They're looking for the currency pair to continue moving up since it broke the 200-day. This is significant here. Typically when you break the 200-day moving average, there's going to be a retest of that, and that's what the institutions are looking for. The institutions are monitoring the 200-day moving average, monitoring price here, and what they're looking for is the potential for the pound yen to fall back down, test the 200 SMA, which is right around the 124.20 level, and they're looking for a bounce off the 124.20 back up to higher levels seen in the daily charts. Now, if you look at the intraday charts are pointing to bearish divergent signals. You see how we have lower peaks seen in the TDI, and this market baseline is way up high. Now, there's a possibility that we get this coming all the way back down towards the 50 level with price either staying flat or slightly moving back to the 200-day. It's not that the market has to go all the way back and touch the 200-day. It's just the fact that the market turns, goes towards it, maybe tags it, maybe it doesn't, and then it makes it push higher. So from an active trader intraday perspective, be careful of the bearish divergences that you see on the intraday charts, because when you step out to the higher time frame charts, you're going to see the market baseline starting to turn to the upside. For instance, if I go simply out to the 1 hour chart, you can see that the market baseline is starting to turn up. Now it's kind of flat right now, but starting to turn up. If I go out to the 4 hour chart, look here. The market baseline, the yellow, got kind of high, came back down, now starting to turn back up again. Let's take a look at the daily on the pound yen. Look at this. We do have a very high move up, seeing the green and the red of the Traders Dynamic Index, but sentiment in the market is still moving higher. Where are we going from here? The potential is to see it go to 125.60 and then higher to about 126.40. Now, where do I get these figures from? 125.60 is the previous high back here, seen back in late October, early November. 126.40 is from a measured move of this inverse head and shoulders pattern. You can see we had a low, lower low, a higher low. Now, typically in an inverse head and shoulders pattern, you want an inclining neckline. Here we have a descending neckline, but the market broke right here. So I'm simply going to take a measured move from the neckline down to about the average low here. The average low sitting right in that neighborhood, somewhere like so. And if I take this and move it to where the break occurred, look where we are at. There's that potential move to 126.40. Now, if the market continues moving up without testing the 200, you got to be prepared for that. Be careful of trying to think that the market has to retest the 200 SMA. It may not. We may just get a strong bull run. But be careful, because as we move into repatriation of the yen, we're going to see some strength in the yen, and that's going to bring this back down. Also, the Bank of England, if you recall, a few days ago, increased their quantitative easing by 50 billion. Also, they've had some economic events that did not meet forecasted expectations. So there's the idea that we'll see a drop back down in the pound dollar. So if the pound dollar moves back down and we see some strengthening in the yen, which will cause the dollar yen to move back down, and expectations are to see the dollar yen potentially come back down towards 78.60 area, and on the pound dollar the potential to see it come back down towards 57.35 area, we might see the pound yen drop back down. Let me go back to my 30-minute chart. There's the possibility of seeing it come back down towards the 200 SMA, but the key point is, if the 200 SMA holds, we go higher. And make note, the potential targets are 125.60 and 126.40 seen on the pound yen daily chart. Well, folks, it's Steve Malone with Compass FX. Hope some of the information here about the pound yen and the reason for its move, maybe that'll give you some information that you can use to help you trade. Make it a good day. Get some good trades. We'll talk to you next time. Bye-bye.